Good afternoon, everyone. This is Hunter Mozingo bringing you your daily market insight video here on Thursday, June the 16th, 10 minutes after market close in Jacksonville, Florida here as I bring you this video. And it's become kind of a customary thing over the course of this year, but once again, very poor price action, pretty nasty declines on the major indices as well as pretty much most every stock and sector out there today. But in today's video, we're going to talk about one moving average, and it's a weekly moving average at that, that you should be paying attention to. We've talked about those fibs last Monday on the Qs in the S&P, and this is going to tie into that a little bit. So stick around. We're going to get to that in just a moment. But first, let's talk about what happened today. Fed bounce, short-lived, just for a day, really, and a nasty gap down this morning to new lows as there was really no buyers to be found. So just poor price action. This is something that we've seen before. Last Fed meeting on May 4th, we had a rally. The Qs were up about 3%. S&P had a big day up. Next day, both were down in the 3 to 4% range. So kind of the same situation we saw not too long ago at the beginning of May. But performance-wise, G6, again, these numbers are very similar to what we saw on Monday, but big time declines here. G6 down 5.27. S&P down 3.25, QQQ down about 4%, Dow down about 2.5%, mid caps and small caps down nearly 5%, a 60-40 down 1.85%, and Grotection slightly green today, up 0.04%. So again, there's no changes to state from this past video or to the trend gauge. Correction is the state of the market, and all four trend categories here, leaders, short-term, medium, and long-term, all pointed downwards as well, and that is not going to change, at least in the near term, until we start to reclaim moving averages or get back above some key levels. And right now we are just extended to the downside and getting more extended to the downside. So really just not a whole lot of buying power or bounceability in this market so far, it seems, even though we've had a really nasty sell-off and we have been at least short-term wise extended to the downside. So moving along here, I'm going to highlight Revere before we get to the tail of the tape, as I usually do. Again, if you want to know more about what we do, what our approach is, what our strategy is, why we were green just ever so slightly on a day where the S&P and the Qs were down 3 and 4%, just feel free to send me an email or reach out to anybody on this page, Merrill, Dan, Tim, or Don at revereasset.com. You can ask them anything. You can ask me anything, whether it's about this video or it's about Revere as a whole. That is perfectly fine. Don't hesitate to send an email or call this number, 855-732-5932. So let's get to the tail of the tape. I've got the S&P 500 on the right side of the screen, and you can see what I mean about that bounce being short-lived. We tried to consolidate a little bit here. You had some volatility yesterday with the Fed and a big spike up, and ultimately that led to a nasty gap down this morning and really poor action as the day wore on too. So market state correction, we touched on that. Headwinds remain the same. Sentiment pretty down in the dumps, as one would expect. Put call ratio still kind of hanging out in this 1.2 to 1.4 range. Hasn't seen a massive spike upwards yet. VIX kind of the same thing, back up into this 33 to 35 range that it was at in Monday's video. So back up into that area, kind of that's roughly the recent highs for the year. Hasn't been able to really get past those up into the 40 range. And then fear greed coming back down again to a 14 here, -6 from the last close. As we noted on Monday, bear case is what's in effect here. Rally failure and break of the 21 EMA. You can see that taking place. What were we watching today? Support possibly 36.95 to 37.05. Broke that support and closed below it, as you can see there over to the right. Action wise, open down almost 2.5%, 2.3. No buyers to be found. We kind of trend lower to around 36.50. Base near the lows, come back up to around 36.80, 36.90 or so, and then ultimately trend down to 36.39. And then we close slightly off the lows today, about 1% or a little less than 1% off the lows. So basically at the lows, you had the S&P down around 4%, the QQQ down close to 5%. So not the greatest action there from the market. as you would expect on a day like today. Just really not any ability to sustain any type of bounce whatsoever. Low and high here, 36.39, 37.28 was the high. Again, that 3,700 level was a big level to possibly try and hold on to. Lost it pretty early in the day and really wasn't able to reclaim it. Notes here, these are the Fed pivots, or the note, or from when the Fed reported. Here you can see 2 p.m. we were at 37.80, 3:30, 38.15, low to high in that range, 37.22 to 38.38. All of these were broken here. Just again, a brutal gap down with not much of a bounce whatsoever. So performance-wise, again, S&P opened down 2.3, closed down 3.25, G6 down over 5%, 60-40 about 2, and grow slightly green today, up 0.04%. Sector-wise, natural gas and agriculture green today, and also red to green reversals here on oil itself. But we're going to talk about how oil was able to be green, but yet oil stocks were getting crushed today, kind of decoupling from trading correspondent to the commodity. Certainly something you want to take note of. Gold and gold miners reversed to green as we saw the dollar come off a little bit. And then PDBC, this is a commodity fund we track here, also reversing to green. I have bonds here in yellow, and that is just because bonds, although they didn't quite make it to green if we're talking about the total bond fund here, but we did see like TLT, the Treasury ETF, that did reverse to green. BNDW, that's the total bond fund, that didn't quite get to green, but it did close well off the lows. So bonds putting in a pretty decent reversal here. UUP, the dollar down about 1% today, and then all major sectors red. No trades, so no change in the beta. Oversold gap down with no buyers equals a dangerous market. That is the bottom line from today. We were already extended to the downside. Woke up this morning to a nasty gap down, Q's down about 3%, S&P down a little over 2%, and ultimately not really able to sustain any type of bounce or recovery from those levels. Moving along here, the declining 200-day and 40-week continue to get a little lower, 44.24 and 44.09. 50-day now around 41.30, and the declining 21 EMA right around 39.65. Again, today's close 36.67. Vicious gap down to new lows. Just poor action in general, as we are about as extended to the downside, at least in regards to extension from the 50-day moving average, as we have been all year. So with that being said, we're going to take a look at UUP, which is the dollar, and we're going to look at the 10-year note. Then we're going to get into the indices, and we're going to talk about that key moving average along with those fib levels. So here's the dollar, down about 1% today, like we said. But what's important here is this really did not provide any reprieve for stocks. So one would think the dollar coming off in a pretty big fashion like it did today, maybe that would provide some relief. Maybe stocks could start to come off the bottom, but we really did not see that. We saw gold reverse nicely as the dollar kind of weakened throughout the day, but we did not see equities really get much love. That's a correlation that you want to pay close attention to moving forward as well. Just today, like we said, didn't seem like buyers were stepping up to the plate. And then TNX, this is the 10-year note. You can see this was actually green earlier in the morning and ultimately reverses to red here, pulling back now after this monstrous move, 3-day move up here from about 3 all the way up to 35 here. So if you're looking at it in terms of interest rates, that's 3% up to 3.5 in about 3 days there. So starting to pull back a little bit, but that's somewhat expected after a really strong move up like we saw on the 10-year note there. So let's get into the indices. We're going to talk about SPY. We're going to pull up SPY here for a second. So we touched on the S&P 500. As you can see, losing this key level here, this is 3,700 range. And let me actually pull this up on the S&P 500, a little bit easier to look at here. So unable to hold on to this 3,700, which was kind of where we were, the previous low was 3,705 here. Just again, nasty gap down about 12% below the 50-day. The Qs are about 13.5% below the 50-day. That is about as extended as they have been all year long, as you can see here. So big time extension from the short-term moving average and the medium moving averages to the downside. Now we're just making new lows. With this close, we're about 24% off the high on the S&P. And I'm going to pull up SPY because I want to show you these moving averages and tell it to you in terms of SPY. So that 50% fib we talked about on the S&P 500, and that is the 50% retracement from the COVID lows to this recent high, is right at 349.12. So 349.12 is where that fib is. And also the 200-week moving average, which I don't have the ability to show you here in MarketSmith, but that 200-week moving average is going to be right here at 349 to 350. So it's pretty interesting that that level, or that moving average, corresponds to the 50% retracement level. Similarly, on QQQ, and again, I am looking at a weekly chart now here, on QQQ, the 61.8% retracement level we talked about on Monday's video is 258.05, so 258.05 here. The 200-week moving average is going to be right here around 262 to 263-ish. So you've got both of those key fib levels kind of corresponding to that 200-week moving average. And if you want to pull this up on your own at home, pull it up and look back over the last 10 to 15 years or so, and you'll see that that 200-week moving average, with the exception of the COVID crash, has acted as a pretty decent support level for the course of this run from 2009 up until this year. So something to check out, the 200-week moving average on QQQ and SPY. You can look at it on the other indices as well, but it's very interesting that it corresponds to those fib levels that we talked about on Monday. So moving along here, we're going to go through the rest of the daily charts on the indices. QQQ, same thing, breaking below these recent lows and making new lows, now down about 33% or so, 34% from its highs. IWM, small caps, getting the worst of it today, along with mid caps, again, breaking these recent lows, unable to get back above this area and continuing to the downside, making new lows for the year here. MDY, same situation, down about 5%, doing the same thing, just in a very quick fashion. MDY from 470 to 400 over the course of about 7 trading days there. DIA, which is holding up the best as it is the most defensive of the sectors, but still same thing, new lows, going to this 300 area, just unable to really have any type of progress or bounce at this point. So we're going to get into the charts here, and first thing we're going to look at is gold, which we do own in Grotection, making a big reclaim of these moving averages and showing a big hammer candle today. With the dollar pulling back a little bit, this is what you want to see out of gold here. So a pretty decent comeback from here on Tuesday's close to where we're at now. So GLD and GDX, which is your gold miners, making a decent comeback off the lows here, as you can see there. We mentioned USO. This is oil here, pretty much, crude oil, going from red to green. But oil stocks, not so much. We're going to look at those charts in a little bit. Tons of oil stocks down 5, 6, 7, 8, 9% today, even though you had the commodity itself holding up relatively spectacular, given the fact that the markets were down 3 and 4 or 5%. So big decoupling there from oil and the oil stocks. We mentioned DBA agriculture was having a strong day today. You can see this is the agriculture fund here, up about 1%. Corn, up about 1.5%, wheat. So the food / agriculture related commodities having a good day today, showing some relative strength. Wheat up about 2.5% here. And then lastly, some of the actual individual names showing relative strength. Here's Ali, which is a bargain outlet. If you're not familiar with Ali, they take excess inventory, sell it at a discount, that type of thing. And they are doing very well right now, along with Dollar General, which these are typically very defensive retail names. Again, Dollar General is slightly green, showing relative strength today. But that was really about it. There's not a whole lot of positive out there. I'm going to run through some of these names that had big down days and talk about the key levels here too. So Tesla comes back and almost challenges this recent low of 620 here. You can see the low today, 626. Very big spot to watch is this previous low, 620.57, as well as the low of today, which is 626.08. Just a nasty day for Tesla, was down nearly 10% at the lows. We've talked about Tesla and NVIDIA and how they're important to the growth stock world, and you can see not looking good here on either one of them. NVIDIA actually did slightly undercut this low over here, 155, today making a new low right around 154, down about 6% here too. Apple, which we've talked about numerous times over the course of the last few weeks and how important it is to the overall market, losing a really big level here. This 132 was a big spot. You can see it's the lows from roughly the last 3 days, as well as the lows from 520 here. And then today, the gap down, basically resistance is now this 132 level. So this is flipped from a support area to resistance, and Apple is now down to about 130. So losing a big level, again, already extended to the downside, but continuing down further. SOX and ITB, two of the worst performing sector ETFs today. You can see SOX down nearly 6% here, and ITB, that's your home builders ETF, down 7%, just absolutely falling off a cliff here. XOP and XLE, these are the energy ETFs. I'm going to save you from going through all the individual stocks. I think these ETFs will tell the story. This is the oil and gas exploration ETF. Names like Oxy, Diamondback Energy, names like that are what's in here. And you can see down 6.5% today. This is what most stocks look like today, slicing through moving averages, starting to see the ADMA come back down through the 21 and the 50 on some names, and we haven't seen that in a while. And then XLE, this is the energy sector ETF that's dominated by Chevron and Exxon, also kind of doing the same thing, breaking key moving averages, starting to see the ADMA cross down through the 21 and so on. So energy stocks not acting like the commodity today, down in pretty significant fashion, while you had USO green. Very important to note that. Also, growth stocks, as expected, not holding up so well either, but it is important to note names like DOC in here, Digital Ocean Holdings, not making new lows for the year. Even though they're down big today, they're not making new lows for the year like you see on the S&P, small caps, NASDAQ, etc., the Dow. Some of these names actually starting to show a little bit of relative strength in the sense that they aren't making new lows, and maybe that changes quickly, but these names were still hurt pretty hard today. Bros, another name we watch closely, again, important to note, not making a new year-to-date low while the indices are. And lastly, in the high beta world here, we'll look at ARKK just to give you an idea. This is very close to taking out the year-to-date lows. That level is 35.10. That's the low for ARKK. You can see it's about $1.50 or $2 off of that. But again, ARKK down almost or over 6% today. PWR and Enphase, two of the better looking individual names out there coming into today, and that just both got vaporized today. So PWR down 8%, breaking that back through the 50, the 21, and the 200 all in one session. ENPH, which was sitting right on the moving averages coming into today, actually had gotten back above the 21, the 50, and the 200. Same thing, breaks back through the 21, the 50, and the 200 all in one session. So even the things that look like they were holding up or showing relative strength getting taken to the woodshed today. And last couple here, we're going to talk about Bitcoin and we're going to talk about Ethereum really quick. This is BITO. You can see down about 3.5% today. Actual Bitcoin going below 21,000 today to around the 20,000 level, just continuing its descent after breaking down from around the 30,000 level. And Ethereum also continuing to get crushed. You can see down 10% here, getting close to that 1,000 level on Ethereum. So cryptocurrency continuing to have a bloodbath, along with most stocks and the indices. Really not hardly anywhere to hide today, with the exception of gold and a few other small areas. But just nasty, nasty action across the board. And that is pretty much it for today's video. Again, check out that 200-week moving average. It corresponds with those fibs on the S&P and the Qs. That's the 50% fib on SPY is 349.12. The 61.8% fib on QQQ, 258.05. So check those levels out. Check that 200-week moving average out if you got the ability to do so. And I will see you guys on the podcast. Y'all have a great weekend.